Today we're going to look into the best technology stocks to buy right now. If you want to see if a stock is likely to go up, the first thing that we have to make sure is that the stock is in a strong industry, because I found that 97% of the biggest moves in the stock market happen when the stock was already in a bullish industry. So we don't want to go against those odds. So how can we know if a stock is in a good industry? So we come in TC2000. Up here, I will put the chart of the industry, because stocks are all grouped in certain industries. And then down here, I will put the chart of the stock. So the first industry that I found that is looking okay is computer systems. It looks like it might fail soon, but our job is not to predict the market. Our job is to act how the market is acting, because we lose more money when we try to predict the market than just going with the flow. So if you have to look at the industry, you can see that whenever the industry is going up, the stock will go up. When the industry starts to correct and go down, the stock will suffer and go down. When the industry goes up again, the stock went up. So stocks always follow the industry. And in this computer system industry, we have two stocks that are looking great. I actually took a position in Arista Networks already. It gapped up on this day. And whenever you see a stock gapping up like this, it's always a good time to buy. I like gap ups because they show that a lot of people are interested in the stock, and also gap ups have an easy stop loss. We look at a weekly chart. You always want to look at the weekly chart first. So if we look at this weekly chart, we can see that it is forming a cup and handle, right? If we put it on a daily chart, it's a cup and a handle, right? This is a good sign that the stock is likely to go up. If we look at the base, we can see that when it's trying to jump out of the base, there's very huge volume. So a lot of people bought. And while it's correcting in this handle, you see the volume dries up. So that means a lot of people are not selling the stock while it's coming down. And then it gaps up. So when it gaps up, we know that, hey, something is good. And I normally use 1.5 times the average true range as my risk. So here we can see 4.46 or $14.66. I bought it here at the open around $320. My stop is 4.66. But since it was a gap up, I know that it should not come back and try to cover this gap. So instead of having a 4% risk, I'm likely to have just maybe a 2.3% risk. So if I put in maybe $10,000, then my risk is going to be $200. And if it goes up around 30%, then I'm going to make around $3,000. So risking $200 to make $3,000, I like those odds. I really love those odds. And you see when it jumped up, it also did so on volume. So this is a very good entry. And I don't think it's too late to buy this stock. If you have to buy it here, you can just put your stop around 318. You'll also be risking around 4%. And you can expect it to go about 20 to 30%. But if it does 20% in less than 3 weeks, then you want to hold it for 8 weeks so that you can get the whole piece of the pie. So ANET, Arista Networks, which is ANET, is a good stock. Another reason why I like Arista Networks is the earnings. If we look at the earnings, the return on equity is great. It's a super stock. The earnings per share is growing about 40% for the last 4 quarters. So these are really strong earnings. The company is making huge profits. The revenue is growing around 20% on average. So this company has really strong revenue. It is selling more products. This is my best pick in this video. And there's also another pick that I really like that I'm going to show you later on. But let's go into the other ones. The second stock that I like is STX. STX, which is in the same industry of computer systems, we can see it has a cup with handle forming, you know. We can also draw here. But the reason why I don't like it that much is that if we look at the earnings, the revenue is not growing. It's not selling as many products as it was selling. Actually, the revenue is dropping. Earnings per share, it's making more profit. So maybe it has a bigger net margin. We don't know how it's making profit. Is it due to an investment but not due to its products? We don't know. So the earnings are not that strong, but the stock is showing some nice price action. So it would also be like an okay entry. I wouldn't buy this thing because For the same industry, we already have another better stock, which I showed you before. But this is also another good option. And then the next industry that I like is software infrastructure, which is showing up. And one of the stocks there is CRWD. So here we can see this is the industry chart, this is the stock chart. And I already showed you the stock normally follows the industry. So here, when the industry is going up, stock is going up. Industry struggles, stock struggles. They all work hand in hand together. Industry goes down, stock goes down. Industry goes up, stock is trying to go up. This industry is looking good. When we come onto the chart, trading view, type in CRWD, then we look at the earnings. How are the earnings looking like? This stock is making crazy growth. The last 4 quarters, it's averaging around 32%. That means it is selling way more products, than it normally does. That is a very good sign. If we look at the weekly chart, you can see that it does something like a cup and handle. If we draw here, we can see, and then it jumps out on volume. Whenever you see a stock jumping out on huge volume like this down here with a strong bar like this, you just know institutions are trying to buy this thing. Because normal traders cannot push the price this much. These are banks and hedge funds pushing this stock price up. And by the way, I already took a small position into this one too, because when I see them in the morning and they gap up like this, I just buy these things. I don't waste time. I don't think too much. We can see that it has a cup and handle over here. It has this line of resistance, and then it jumped out here for a breakout. When a stock breaks out like this, that means there's a lot of demand. Something is going on. Somebody wants this thing. So the thing jumped out, and I think it is likely to keep going up. But where is it likely to go? Where is it likely to go? That is a bigger question. What I normally do is that I risk 1.5 times the average true range, so I can just see a 5.7%. Since it gapped up, I don't want it to see covering this gap, because that means that it has become weak. It gaps up in the morning here, 365, I bought it, I remember. So for me, my stop loss is around 360, around here, 359. So I have around just a 2% loss. And these are the type of stocks that I really like. This is why I really like gap ups, because they allow me to have a tight stop. The stock should not come back down. If it comes back down, that means it is acting weak. It's not acting strong. And I also realize that when stocks gap up like this, they normally can go up maybe 5 times risk. So my risk could be 5.7, 5 times might be around here, 29%. So if you put in $1,000, you're likely to make $300, and yet you're risking only $20. So this is a really good trade to put into your account. You can see here also when it had earnings, it gapped up. It did not cover the price. So you see this was a good time to buy. And then it went up in price, went up for some really nice profit, went up 50%. Is it going to go up 50% again? I don't know. As a trader, we do not know. But this is a good time to buy. It's coming out of a cup and handle. So get in there, enjoy the profits, have a very tight stop loss, and then just wait and see how the stock acts. If it goes up, around 20 to 30%, then you can sell. But if it does 20% in less than 3 weeks, that means it's acting very strong. Then you want to keep holding that thing for maybe 8 more weeks. And if it closes up below the 50 moving average, then you can just sell the whole thing. CrowdStrike is my second best option. Arista Networks was the first one. CrowdStrike is the second. CRWD, the second best option. In this same industry, there's some others that I'm really looking at, like cyber. As you can see, earnings are looking good. Return on equity not that great, but we can see a double bottom here. So you see, it came, stopped out some people. Actually, this is even a triple bottom. You can see it's really bouncing off this price range over here. Bounces off this price range and then has a strong bar. So this one is also a good option, but it's not my third best option. My third best option is actually Palantir, which I also took a small position in because it gapped up on this day. I was like, let me get in a little bit. It shouldn't come back to around $22. If this thing comes back to $22, just leave it and then wait for it to cross above $24 before trying again. I don't like the weekly action. The earnings are great, but if you look at the weekly action, I'm not seeing a cup with handle. The best I can see is a triple bottom. It comes bounce. Doof. Actually, it's even bouncing 4 times. Comes 1. This is the first low. Boof, boof. Fails to go through and then now is going up. But since the industry is going up, I took a position here as well. It's very tight stop. We'll see. Another one is Adobe. This is like my last. I wouldn't buy this one. It gapped up on earnings. It's been beaten down for a while. But the earnings are not that great. They're not like Palantir or the CrowdStrike stock. So this is my last option for this video. I don't really like this stock, but it's in the industry that is moving, so it could move up. And also, since it's been beaten down for a long time, maybe value investors might be coming in to try to get this thing. We do not know. If you like this type of information, this channel is going to have lessons to teach you how to swing trade the stock market. So you want to subscribe for that. You can also subscribe for my free newsletter where I'll be sharing these ideas with you. May the markets be with you. Thank you.